Hi everyone, so in today's video I'm going to teach you how to prepare a statement of financial position. Now if you didn't see my previous videos about how to prepare income statement and how to prepare trial balance, I recommend you watch them first and then watch this video, and I'm going to link them down below so you can check them out before you see this video. Anyways, so how to prepare a statement of financial position, or what is a statement of financial position? The statement of financial position shows the form in which the wealth of business is held and how much wealth is held in each form. Okay, the statement of financial position equation. Always the asset equal equity plus liability. This is an equation, so you have to memorize it, that an asset equal to equity plus liability, and asset minus liability equals to equity. Okay, so if you have a question that asks you to prepare statement of financial position for the year ended, and they gave you a trial balance, so they give you a balances. So if you want to know how to debit this and credit, I have the video down below. So first of all, you want to write down so this is statement of financial position. So we have non-current assets and we have current assets, and then we have the total assets. And then here we have equity and liability, non-current liability, current liabilities. Okay, so in the non-current assets, we have a property, plant and equipment. So how I'm going to work that out? So here I have an equipment, and then I have an accumulated depreciation. So this has a working. Okay, so if it asks you to so the working for the accumulated depreciation, so you first of all you want to do this table, and you have to know that, write these down, accumulated depreciation, and then we want the net book value. Now this is a simple way, but this is a simple working, but later on I'm going to teach you a more complex one. So the cost at the beginning of the year is 6,800. We don't have any additions, we didn't bought anything, so it says 0. So the cost at the end of the year is 6,800. Then we have an accumulated depreciation at the beginning of the year, which is 1,410. And we don't have any charge for the year, so it's the same at the end of the year. Now the net book value is the accumulated depreciation minus the cost at the end of the year. So the accumulated depreciation at the end of the year minus the cost at the end of the year will give you the net book value. So we got these two numbers from the trial balance here, 6,800 and 1,410. So you just want to write this down as the net book value, which is 5,390. So always you write the net book value. And then we have an inventory. The inventory in the statement of financial position is always the closing inventory. So in our trial balance, we have the inventory. We have in the inventory for the at the beginning of the year, which is January 1st, but we don't have the inventory. We don't have, sorry, the closing inventory. So we're just going to write 0. Sorry, we're just going to write 0. Receivables. The receivables are 22,600. We got it again from the trial balance. Here it is, receivables. And then we have the bank, which is 0, because they didn't write it in the trial balance. So the total assets, you want to add them up. So add this number, add them all together, and it will give you 27,990. Okay, so the capital is also on the trial balance, which is 18,000. Revenue reserves. We get the revenue reserves from, so the revenue reserves, we get it always, and it's called also retained earning. So we get it from the income statement, which, as I told you, watch my previous video so that you know from where we got the revenue reserves. So it is a minus 28,310. So we get the revenue reserves or the retained earning from the income statement, which is the profit after tax. Okay, now we got a long-term loan, which is 20,000. We got it from the trial balance above. And then we have payables, 18,300. Want to add them all together, and it will give you 27,990. A really important note that the total equity and liability have and has to equal the total asset, as we've said here in the equation, which is the asset equal equity plus liability. So it has to equal. If it's not, you've done something wrong. And yeah, this is how to prepare a simple statement of financial position. I hope you found it helpful. Thank you for listening. Bye-bye.